Well, good morning, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter, and this is for February 10th, 2024, and actually it's Sunday, February 11th, 2024, so we're a day late getting this part of the newsletter out. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, oh my gosh, the S&P broke through the 5,000 barrier and stayed above that magic number to close at 5026. That's 5,026 on Friday afternoon. Now, combine this super amazing rally with Super Bowl weekend, and folks, it just doesn't get any better than this. In our weekly stock analysis video, is Tesla dead? Nope. We see a rally just beginning, as we mentioned in our weekly letter. And aside from not only a new model coming out, but there is a gap above us, and this stock is going to go up and at least close that gap. And we can't wait for that driverless taxi to come out, which should be available in a couple of years. And folks, I can't wait to push a button on my phone and have a driverless car pick me up. It doesn't get any better than that, as I said, above with the market this past week. Now, Kathy Woods, who has her ARK portfolios, well, Tesla is the largest holding in her ARK ETF portfolio. And if she says that new taxi is coming out in 2 years, I gotta believe her. She's pretty good when she comes out with news on Tesla. And our ETF video, well, some of you saw this yesterday. We sent it out. And the top stocks in our ETF sector, Stars portfolio, is outshining the S&P by 2-1 already in the first 5 weeks of this year. Folks, the hedge strategy is also beating the S&P with half the risk of the overall market. And you're going to see in this letter that if you just bought and held of the past 3 years and 5 weeks, you'd be up 108%. But you have to accept risks with that. That's why we talk about hedging, so you can have your choice. If you can accept that risk, folks, you're going to make a lot of money. But we don't want to hear you crying on the downside, so we're looking at hedges of either 30% of the portfolio or 50% of the portfolio, but you'll see that in the ETF video, folks. Now, let's look at the S&P 500, and the top red line and the bottom red line are volatility bands. They're called the Bollinger Bands because they're named after John Bollinger. And all we have to know here is that when this market went above the band over here, we knew that it would drop back a little bit and then resume its upward trend, at least for a while. And folks, it came down, didn't even touch this center line, which is a 20-day moving average, didn't even touch it. Just came down one day, next day bounced right back up, and now it's pushing this line all the way up. And when we come down here, the intermediate term signal that we use just looks fine, folks. As long as this blue line stays above this red line, we're doing just great in here. Now, let us look at the S&P 500. And we can see, well, folks, we are just riding. Now, this is the 20-day exponential moving average, so it's a faster 20-day moving average than the one on the previous slide. And boy, oh boy, this market is just marching right up and pulling all the averages up with it. 50-day moving average, blue line, 200-day moving average over here. Now, we're getting a little far above that, so we do expect a pullback to the 20-day moving average. And you can see down here these gray vertical lines, that though that represents the market closes or the volume on the days that the market closes up. And you can see the gray lines really dominating here, but the volume is starting to fall off a little bit. So maybe we're going to get that pullback that we were talking about. But right now, the intermediate term indicator, as we showed before, is doing just fine, thank you. And the QQQs, same picture. We don't have to talk much about this. Same exact picture as the S&P 500. And, of course, the QQQs are where a lot of our tech stocks reside in our ETF portfolio, along with the technical stocks from the tech sector, the tech ETF, and also the semiconductor ETF. So, folks, everything is looking fine. Again, down here, a little bit worried about the volume dropping off toward the end of this week. And what about our signals? The short-term signals are mid-range, so we're not worried there. And our intermediate-term indicators are all up on the Dow, the S&P, and the QQQs. Now remember, the QQQs are the NASDAQ 100 stocks minus any financial stocks. And that's where most of the tech stocks, the larger tech stocks, reside. We're talking about your Googles, we're talking about your Apples, we're talking about Meta. So that's where they all hide out. And folks, those stocks are all in our portfolio. And for those of you who are always hedged, yep, we've got those hedges on all the time, and we're still outperforming the S&P 500 with much less risk than the S&P 500. And what about portfolio protection? Well, folks, for those of you who want protection on all the time, about 12% below the market, we'll be rolling this February put option out on the SPY, and the SPY is the S&P 500 ETF. We'll be rolling that out over into May already. So we like to, this is a $135,000 portfolio, so we like to have the ETFs that are about $40,000 each, actually more than $40,000 each. So about $135,000, $140,000 portfolio. You can have 3 puts in there, and we like to have them spaced out in case the market starts to fall, because sometimes when it falls, it'll take a while to get down to these levels here. So we want some of the put, and that's when they get expensive. Right now they're very, very cheap, and that's why this week we're going to roll over the February's into the May puts. So keep your eye out on our daily letter for that. So folks, we had a phenomenal week. We had a phenomenal first 5 weeks of this year. So we have the sun rising over a very calm ocean. It's Super Bowl Sunday. Folks, enjoy the game. If you don't watch the game, be with your family, have dinner, just enjoy yourself, take your mind off the market, because guess what? It'll be open tomorrow, which is Monday, and hopefully we're going to have a real good week. So folks, stay safe, and we'll see you back here another day.